Top 10 stocks to invest in for 2022. The year has not been kind to equities. Despite a recent rise, the tech-heavy Nasdaq is down 17.3%, the Dow Jones Industrial Average is down 6.5%, and the S&P 500 is down 10.3% through the end of October. While several causes, like as the Russian invasion of Ukraine and consecutive quarters of negative GDP growth, are to blame for the protracted downturn, inflation has proven to be the biggest barrier. But before starting, support the channel by liking this video and subscribing to this channel for future updates. Month after month, prices have steadily increased at rates not seen in almost 40 years. In response, a sluggish Federal Reserve raised interest rates many times by 75 basis points. Here is a glance at US News December 2021 predictions for the best stocks to purchase for 2022. Number 10. Costco Wholesale Corporation. Even though no one is certain what to anticipate from the economy in the fourth quarter, many experts are predicting slower growth in place of Federal Reserve interest rate increases. The Fed has started a series of abrupt interest rate increases to lower inflation. The decision will eventually bring about economic equilibrium, but it may short-term hurt certain poorly equipped enterprises. The greatest equities to purchase right now are those that have demonstrated both long-term growth potential. Costco Wholesale Corporation comes out to be fully capable of managing the current environment and rewarding investors with long-term development. Number 9. Mercado Libre Incorporated. Mercado Libre is an Argentinian business with headquarters in Buenos Aires that was founded in the US and runs an online platform for e-commerce, financial technology, and a variety of other services. Although the company's activities are based mostly in Argentina, it provides services to at least 16 Latin American nations. Because there isn't a better parallel, Mercado Libre is the Amazon of Latin America and it is still expanding quickly. Number 8. The Boeing Company. The Boeing Company has struggled more than other equities throughout the epidemic. As a result, let me explain how Boeing's recent tragedy makes it one of the greatest stocks to purchase in 2022. In reality, Boeing was reaching all-time highs as recently as 2019. Shares were trading about $340 months before the pandemic, after a burgeoning travel industry. The advent of the coronavirus, however, sent shares down to a level they hadn't seen since 2015, wiping out profits made over the previous 5 years. When the pandemic was deemed a worldwide emergency in the first quarter of 2020, Boeing stock fell by around 257%. Unsurprisingly, anxiety and doubt caused the travel sector to suffer. Number 7. GXO Logistics Incorporated. Even though it is likely that the majority of investors have never heard of GXO Logistics, the covert warehouse operator is beginning to make a strong case for inclusion in any investment portfolio. GXO Logistics is poised to prosper at a time when the Federal Reserve is anticipated to raise interest rates at all costs to battle inflation. GXO appears to be more than capable of surviving the rest of 2022 and all of the rate rises. However, GXO isn't only a defensive move, it's also an offensive one that stands to gain from one of this generation's largest megatrends. Number 6. The Walt Disney Company. The Walt Disney Company could be among the greatest stocks to purchase right now. If nothing else, the stock appears to have the majority of the positive indications that investors seek. First off, Disney is now selling at a relatively good valuation, making it more appealing at a time when the majority of other stocks appear to be overpriced. Disney is another blue chip stock that seems more than equipped to withstand a coming recession and even expand faster than many of its competitors. Finally, Disney is considering launching its membership club, a move that may significantly boost income for equity that is currently undervalued. Number 5. Palo Alto Networks Incorporated. The greatest stocks to purchase right now may vary depending on the individual. Shorter-term investors are probably giving defensive companies more weight since they have demonstrated. On the other hand, those who have long-term goals for the stock market may see the sell-off in 2022. Although short-term price movement may be unpredictable, high-growth enterprises may find that today's prices are an excellent entry point. Number 4. Salesforce Incorporated. Salesforce Incorporated is regarded as one of the greatest stocks to purchase right now despite the general market hammering down the majority of technology stocks. The near-term outlook for Salesforce is less than ideal according to both fundamental and technical analysis. Salesforce is beginning to appear from a fundamental standpoint to be a high-growth tech firm with a tactical defensive stance in an inflationary climate. When interest rates are increasing and the economy is slowing, tech companies often don't fare well, but enterprise software like Salesforce Number 3. Qualcomm Incorporated. Qualcomm is a worldwide company with its headquarters in San Diego that focuses on creating chips, software, and services for wireless technology. Qualcomm's achievements, as a pioneer in wireless technology, are essential to the adoption of the 5G, 4G, CDMA 2000, TD-SCDMA, and WCDMA mobile communications technologies. Despite playing a significant part in cellular communications, Qualcomm shares fell after the company's most recent earnings report. Shares of Qualcomm decreased by around 4.7% between the market closure. Number 2. Alphabet Incorporated. Investors therefore frequently favor conservative firms with strong balance sheets that can withstand inflationary pressure. It is important to remember, nevertheless, that there are certain conservative equities for which investors do not have to forego growth. Alphabet is ideally positioned to play both offense and defense for a portfolio. Number 1. Ford Motor Company. Ford has experienced a difficult year, just like the rest of Wall Street. Over the course of 2022, shares of the automaker have more than been slashed in half. Ford has had pandemic challenges, semiconductor shortages, high inflation expenses, and supply chain problems throughout that period. More than 45,000 automobiles are anticipated to be unfinished and unable to be sold in the current quarter due to parts shortages. One of the greatest stocks to purchase right now may now be an already appealing share as a result of the most recent downturn. Ford is currently selling with a price-to-earnings ratio of 4.45x sales, at the very least. Ford appears to be appropriately valued given that the automotive sector as a whole is now trading with a price-to-earnings ratio of 9.23x sales. That's it from this video. Let us know what you think about the list in the comments section below. If you enjoy this video, please like video and also subscribe to our channel. Thank you.